Welcome back, everybody. It's Jay Pace from Providence Property Group. Here with me today is my good friend Tuan from Duo Tax. And we've got a question for Tuan today because at the end of the day, when we're purchasing an investment property, we want to take advantage of capital growth, rental yield and depreciation. Depreciation is a very big part of the investment process, but it's also, I think, one of the most misunderstood parts. So Tuan, being an expert in this field, we're going to ask him today, what is depreciation and how does a quantity surveyor help you maximize that side of your investment?
Thanks, Jay, for having us on today, and it's a great question. Tax depreciation is a very, very technical part of investing in property. It's a portion where we can maximize a tax return on our return on investment on our rental properties, and that's through claiming the wear and tear of your rental property as tax deductions. A lot of things that we often miss is the tax depreciation side of things, and that's because generally everybody knows about tax deductions when it comes to the interest on your loan, the property management fees, the council rates that are associated with owning that investment property. More so, but tax depreciation is something that we don't think about. Non-tax deduction in terms of cash deductions, it's not something we have to fork out in order to receive a tax deduction. That's something we often miss. The benefit of tax depreciation, of course, is by assessing the wear and tear of your property, that building can depreciate over X number of years, typically 40 years for a brand new property, and that means you get value for 40 years of the life of that property. And I guess what we do as quantity surveyors is go out there and assess the property for depreciation as allowed by the ATO. The ATO has qualified people that they will allow to assess for depreciation. Quantity surveyors are those people that are the go-to people in order to make that assessment when it comes to tax depreciation on the rental property. Things like your oven, your range hood, your carpets, your air conditioning, they're all depreciable, as well as the building itself. So you're talking about the ceiling. You've got your footprint here in terms of slab work, framework, roofing structure. They're also depreciable over the life of the property, and getting one of these depreciation schedules is good value when it comes to getting an investment property.
That's great information. So at the end of the day, it sounds like it's a lot more involved than what a lot of people have the knowledge of in the first place. But definitely from the stats, it looks like many people miss out on doing depreciation schedules, and it's costing Australians tens of millions of dollars every year. So thank you very much for the insight. And if you do want to speak to Tuan and the team at Duo Tax, please give them a call. Get a depreciation schedule done now. Make sure you're not losing money.